Hi, this is a screencast for ACCI Belfast. Here we're looking at the examiner's report for the P2 corporate reporting paper that was set in June 2013. We're going to take a look at the examiner's view of question 2 as to how students actually attempted this question. So this question 2 is actually not a compulsory question. So there's 3 questions in section B of which you must attempt 2. And this question really highlights the importance of covering all the areas within the syllabus. If you don't cover all the areas, then a question like this wouldn't really be an option for you, and you'd thus cut down the choice that you would have within the exam, and you then would have to do the two other questions that remain. And if you didn't like them, then you're really cutting down your chances of passing this paper. So here you are actually having to advise the client on various different accounting issues. So just telling the client what issue was arising and how it should be treated in line with the various standards, with the various international standards within the accounts. So the first scenario dealt with IFRS 8 operating segments, and I think this was pretty clear from the way the question was laid out, as each of the segments was quite clearly defined. So you needed to discuss how these segments were going to be treated in the financial statements. And the examiner is saying that candidates often set out the rules of aggregation. So that's whenever one or more of the operating segments can be reported as a single reportable segment. So there are conditions that need to be outlined and need to be adhered to in order for this single reportable segment to be allowed within the financial statements. And the real main one is that they need to have similar economic characteristics. So segment 1 and 2 had different customers, and in fact, if they have different customers, this is definitely going to show that they don't have a similar economic characteristic, and therefore the aggregation rule was not going to be satisfied. So you couldn't say that these segments could be reported together as a single segment. So most candidates seem to point this out and seem to understand this, which is definitely a good thing. So obviously IFRS 8 is a standard that people seem to be able to get their head around. So some of them actually didn't use all of the information in the question. Now again, this is just coming down to exam technique. Anytime that you're asked to detail out how an accounting issue that's outlined in a question should be dealt with, you should always be trying to pull information out from that question by quoting from that question in your answer, because that just shows the examiner that you're really trying to pinpoint into the different questions and also trying to home in on what the actual requirements of that question are. So in all, the different segments should have been reported as separate segments. So this, if you're reading this back, this seems like quite a simple concept, and you might just agree, yes, this is simple, but sometimes in an exam situation you can make things a little bit more complex. So just reviewing over the way these questions are actually answered will show you that a good logical and structured approach is the best way to deal with these questions. So you need to identify the issue, identify the standard that would cover this, identify any conditions, and then pull the information from the questions to show just how these conditions are met, or in fact how they aren't met. The next was whenever there was a contract with a government body, and this was to undertake a maintenance service contract of a railway line. So IAS 18 was what was required to be looked at here, and the standard that was going to govern how this appears within the accounts. So here we really need to understand that the revenue needed to be measured at fair value of the consideration received or receivable, but then the examiner was saying that few candidates mentioned the requirement of the framework regarding recognition of the revenue itself. Again, the calculation of the fair value was not well done, nor was the unwinding of the discount. Now these are things that you will have met. The unwinding of discount is something that you're going to have met within F7, so you would really think that by this stage at P2 for the corporate reporting paper that you should have a good understanding of this. Again, some people didn't realise that this was a prior period error. So this is again just coming down to, I suppose, exam technique and just being able to practice these different questions. So you should always be trying to home in on dates. When did the accounting issue actually arrive? Was it before? Was it during or after the period that you're actually going to be creating these financial statements for? And then also you just need to try and consider all points of the standard that you're looking at. Part C then, required knowledge of IAS 37. So that's provisions, contingent liabilities, contingent assets. So the examiners here are saying that the candidates understood the requirements of IAS 37 but didn't always apply them correctly. So here we're seeing that people are maybe, rote learning standards, or, they have a general idea, but they actually don't know how to apply them in practice. So this question required a good judgment and an opinion. So therefore, candidates who didn't actually fully answer in accordance with the model answer could still score well. So this is just always trying to form a judgment and an opinion. Anytime you're actually doing this, try and back up your opinion by using the actual standard. So here they're saying that the application of the standard, there was marks available for it, but the reproduction of the standard is not going to give you marks. So this is again highlighting that, at this level, we're not just looking at how much of the syllabus do you actually know, but we're wanting to know, do you fully understand the concepts behind the syllabus and all these IAS and IFRS standards? And also, can you apply them to accounting issues that would very much arise in reality? So this last one required knowledge of IAS 1, which was the presentation of financial statements, IAS 16, property, plant and equipment, and then IAS 20, accounting for government grants and the disclosure of government assistance. Again, just highlighting, this broad covering of the syllabus really is going to require you to cover each point during your preparation, during your revision and your preparation for this exam. So here, candidates needed to follow the scenario in a chronological sequence. Again, highlighting examination technique here. You need to have a good structured approach in dealing with this exam and also in producing your answer. So here you just needed to apply IAS 16, the recognition requirements for property, plant and equipment, and then also just, trying to determine whenever the risks and rewards of the asset had actually passed to the entity. Normally it's whenever there's an unconditional and irrevocable contract is put in place. However, because there's several of the facts that weren't actually known, you needed to highlight this and just show that there was slight, and show that there was no actual distinct facts here that you could apply for this case. So there was an awful lot of the syllabus covered within this question. Not necessarily a great amount of detail, but just actual simple application of these standards to the facts in the scenario. So the identification of the issue, the identification of the standard that addressed this issue, and then applying this standard to the facts would have got you the majority of the marks within this question. And it seems that most candidates had this type of structure down to a T, because the examiner's saying that this was a well answered question, but however the candidates should always show the accounting entries where possible. So again, don't go overboard with your examples, but definitely in a situation like this you would need to be showing your accounting entries.